CNBC TV 18 and IndiaBonds presents Bond Street.
Welcome to Bond Street. Joining us on the show today is Dr. K. Paul Thomas. He's MD and CEO at ESAF Small Finance Bank. Mr. Thomas, hi. Thank you for joining in. At the onset, the ESFA's Q3 performance has stood out. What would you say have been the biggest drivers therein?
Thank you, Manisha. Last 2 years, we were on a transformation path because of the asset quality issues we face in our microfinance book. We have taken various steps. Major was to diversify the asset towards a more secured portfolio. So because of the consistent efforts, we were able to bring down the microfinance portfolio from 70% to 37%, and increase our secured book from 45% to 63%. So the asset like agri, mortgage, mobility, and MSME, and also the major part comes from the gold loan growth. So that is one aspect, and the second was we continued our efforts in rebuilding our microfinance portfolio by introducing the SRO has introduced guardrails in 24. So we have very strictly followed those guardrails. So the new microfinance book is very well performing very well, and also continued our efforts in the bank own channel and the BC channels for the collections, the NBA collections. So that has also really helped us to turn around the bank.
As you mentioned, you pivoted towards secured asset class over the last 24 months, particularly exposure to gold loans. How has that experience been?
Yeah, building up gold loan, especially we have 50% of our branches are in South India, and gold loan is a very, very well-known product, and resources were also available, so talents were available. So we were able to scale it up quickly, and gold loan demand, and generally the small business owners and farmers use gold loan as a bridge funding. They are all very well known this product, and we had good branch network also, so we were able to scale it up.
How would you say does ESAF's overall funding mix look today, and how is that mix evolving for you?
The overall mix today is basically mostly from CASA. 24-25% comes from CASA. Then the major part comes from term deposits. So out of the term deposits, around 24% is NR deposits. Then we are also to build our we also use borrowings mainly interbank borrowings as any other bank does. We also do that, and also we avail the refinance facilities from NABARD and CP, the development finance institutions. We also use that. Also, we have a part of it comes from Tier 2 capital we have raised. Last financial year, we have raised around 415 crore of Tier 2 capital. This was mainly to augment our capital adequacy. Even though the capital adequacy requirement is 15%, we maintain about 20%. As of now, it is 22%. So since we were going through turbulent times, raising Tier 1 capital was a big challenge. So the Tier 2 helped us to improve the capital adequacy. So this is the way we fix our funding mix.
Mr. Thomas, also, how would you say you have seen the corporate bond market evolve with the rise of SEBI-regulated online bond platform providers especially?
Yeah, so in India, it is very interesting to see the online bond market is getting momentum. So far, mostly bond market investors were only institutional investors and HNI investors. Now, the online bond market platform will open up to a large number of retail investors can participate in it, and this will definitely evolve. The debt market will going forward will definitely evolve and improve, and mostly since a large number of the Indian savers are moving to the capital markets, banks will also will have to depend on bond markets going forward to fund their liabilities.
And finally, Mr. Thomas, ESAF has recently raised funds through a bond NCD issuances. How was the investor response? What was the core objective? And what's the key takeaway for bond investors from there?
It was a very good response. The last issue was 150 crore Tier 2 bond, and we got a very good investor response. Even during these difficult times, investors had a confidence on the fundamentals of the bank, and it was, as I mentioned earlier, it was mainly raised the Tier 2 bonds for augmenting our capital adequacy ratios.
Fair point that, Mr. Thomas. Really appreciate your time here today at CNBC TV 18. Thank you so much.
Thank you very much.
CNBC TV 18 and IndiaBonds presents Bond Street.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.